Will you get rich with Goldman Sachs? I thought on this program I'd talk to you a little bit about Goldman Sachs, the investment banking giant based in New York City, but with operations obviously in markets around the world. What is Goldman Sachs exactly? Is it a money manager? Is it a bank? Is it an investment bank? It's about four things in my mind. It's a commercial bank. You might not know that it is a commercial bank. It used to be an investment banking partnership run by its partners. After the crisis in 2007, it became a New York State chartered commercial bank. That limits its capital ratios, which has an effect on its profitability. What else is it? It's a trading company. It's a good trading company. It's a private bank. It's an investment management bank. It's also a dealer in commodities around the world. How's the stock done? Let's take a look. You can see here the price is about $260 a share. During the crisis 2007, 2008, it traded down $50, $60, $70 a share. Why has it rebounded? Well, it's rebounded because its return on equity is up. It's about 9–10%. That's very good for a commercial bank. It's not the go-go years of 20–22% in the 1990s and the early 2000s, but it's a good return on equity. What else does Goldman Sachs do well? It trades. It buys money, it buys stocks, it buys bonds, it trades in markets. That's one of the risks that I think you have with Goldman Sachs. Is it a well-managed company? Yes. All these kind of financial leaders of our time seem to come out of Goldman Sachs. At the same time, it doesn't have net interest income, particularly as a commercial bank. Bank of America might have, some of the other banks. It relies on its trading income. It relies on its returns to manage private assets of its high net worth clients. That's a steady business. It's not the global leader in that. It does it well. So all in all, Goldman Sachs has to fund itself in the market. It has to trade for its earnings, and that can be cyclical. There's no guarantee. There's no solution every quarter that it's going to trade well in its markets. Do I like Goldman Sachs at these prices? What are these prices? Its price to book is about 1.5. Not over the top when it's talking about a commercial bank, but not a bargain either. PE about 14–15 times. Again, pretty average for a bank. I think you can look at Goldman Sachs as a proxy for the Dow Jones 50, maybe for the S&P 500. Will it do dramatically better than they will? I don't think so. Will it do worse? I don't think so. Is it well managed? Yes. Do I want my money in Goldman Sachs? Probably not right now. That's all the time we have this week on The Investment Advisor. I'm your host, Matthew Stevenson, in partnership with Dukascopy TV. Remember, money can take care of you. It cannot take care of itself.